Well, hello everybody. Welcome to P.B.M. Money. Today I want to talk about my new strategy for this market. Now I want to start by saying, as I've said many times, I watch several millennials on YouTube with regards to finance. And I learned something very interesting. There's only one person on there that has taken the same path that I have taken, and his name is Andre Jick. Everybody else is debating and putting money in and out of the market and jumping back and forth. He went out and bought $1 million home, and he came on and explained it in very good terms about being able to borrow money at around 3 and have it grow at about 5 to 7, and he would be silly not to do that, whereas in the market it's much more volatile. My sentiments exactly. In my strategy, if you've watched me for any amount of time, you know that I do not try to build one asset at a time. I always try to build at least two, and it really depends on how the market is doing. For the last year and a half, we were actively in the stock market, and we pulled out quite a bit of profit. We are probably down to $8,000 or $10,000 in the market right now, and we're going to not abandon, we're not going to sell, but we're not going to add any either. We're just going to let it sit there and let the market do its thing. If it takes a run, I've got the bases covered. If it goes down, I'm not at risk of losing anymore. Another thing you should know is I believe that any strategy that you have for investments needs to reflect your specific goals. If you're young and willing to take a risk, then I think what most millennials are doing is a smart thing. That is getting into the market or staying in the market. How you do that doesn't really matter. Well, I mean, it does, but that's where the long-range goal for sustaining wealth at a set historical percentage is in the market, and I agree with that. However, my retirement is going to be based on what happens in the next 3 to 5 years. So I have a different strategy than most. As I said, I have stopped putting money into the market. We have been putting all of our savings and all of the income into savings account, and we are getting ready to close on a little house here in the next month, hopefully. And I guess this strategy could be called all in on real estate. Now, I did not do this lightly. I've given this a lot of thought, a lot of energy, and I've probably been looking at the possibility of doing this for the last 4 or 5 months when we got closer to the crash and I knew it was coming. I was looking for a strategy where it would pay off to not be in the market. And I think I found it, and here's what we're going to do. Okay, so we closed on a little house in September of last year. And that little house is cash flowing around, almost $500 a month. And it rented 3 days after we closed. Okay? So I immediately transferred some more cash from the mutual fund into my savings account, called my realtor, and we were looking. We found this little house last month, and we should be closing on it by the end of this month, I hope. This one is already rented, if everything goes according to plan, and it'll be cash flowing around $500 a month. So, as you can see, my strategy has been all in on real estate. Now, I'm done financing any more properties because my income to debt ratio is 40%. So, I'm going to back off of financing real estate for the next couple of years. We are going to be saving money and putting it towards buying the next piece of real estate for cash. Now, from the 3 pieces of property we will have, it will be generating X amount of cash. We're going to take $100 per property, and we are going to put it into the mutual fund, plus the side hustle that I've got is another $500 a month going into this mutual fund. So from here, for the foreseeable future, we will be investing $900 a month into the mutual fund. That mutual fund's sole existence is to buy real estate. However, the reason we're putting it into the mutual fund and not into all savings is this. Number one, it's building another asset class, and it should build pretty quickly. Secondly, it is generating income or interest, passive income. Now, I was not pro mutual fund until a couple of months ago when I got the statement. And I figured out, because I could never figure out how, first off, how they were making money and not charging me a fee, and secondly, how the market could go down so far and they were still making money. But out of about, I don't know how much was in there, but when everybody else was losing money, we made about $300 or $400 on those 2 accounts. And so, having been in the market a little bit and done some research, I figured out that they have divisions in their fund that knows how to do shorts and puts and all that stuff. So they're hedging their bets as the market fluctuates. And that's what they get paid for. So I'm going to put my fears at rest. It might not make a lot of money, but as of right now, we've probably got around 20 grand sitting in that mutual fund, and we'll be putting in, like I said, around $1,000 a month for the foreseeable future, and it'll make some interest for us. Now, over and above that grand that's going in there every month, we're going to be putting everything else into savings. Now, the amount we are saving is absolutely blowing my mind. I'll just mention right here, I just realized that as soon as we close on this little house, we will have enough net income coming in every month to cover my living expenses, with the exception of housing, and our duplex will cover that. So we're doing very well. Our total gross savings right now is forecasted at around $42,000 this year. So if you take $42,000 minus $12,000, that's going to leave about $30,000 additional dollars in our savings account. So theoretically, at the end of this year, we could go buy another house. I don't anticipate doing that. I anticipate waiting 2 years towards the end of 2023, then buying a house, then buying one at the end of 2024, and then waiting 1.5 years and buying my duplex. So why am I buying the last two houses for cash? Well, I explained one reason was the income to debt ratio. The second reason is because when I go to buy my duplex, I expect to be spending around $200,000, and I want to be able to finance it, which means if I've got 3 properties and 3 financed, I'm going to need at least 2 properties with no financing. But the difference is when I go to get my duplex, I expect to have around half of that cash money down. I don't want to spend that much, but I will have the availability of that, I think. So we are all in on real estate for the next 3 to 5 years, all in. We are going to be periodically, I think, getting in and out of the market. We're going to fund our mutual fund every month. It will be getting its $900 every month. Anything we do in the market will be over and above that. And everything else that we are able to save will go straight into savings. And that will be our first line when we go to buy our next little house. So as I have said, and as I believe, and as I have done, our personal savings hasn't changed in several years. But our investments are financing 2 other income streams. One is a mutual fund, one is savings for a future investment, plus the money we have in the market. That's how wealth is built. I couldn't possibly save $40,000 a year on what I make because I don't make that. But what I make plus what the investments make and plowing it all back into in different investment streams, we're going to be able to save around $40,000 this year, which is absolutely amazing. And the last 2 houses we're going to buy are going to be in cash. So God is good. He's protecting us. He's taking care of us. All we have to do is keep doing what we're doing. Try to be smart about it. And if you're watching other finance guys on the internet, go follow Andrew Jick. He seems to get it. For the other guys of what they're doing, I mean, if you're stupid wealthy, and it doesn't really matter if you lose $1 million in the market or not, then I think what they're doing makes sense. Most of us can't do that. We're not in that boat. And for me specifically, every penny I have needs to be tied up in retirement. So I need to be very careful with the asset classes I'm working on building up. So what we save plus some income from investments is buying real estate. The real estate plus the rest of what we're making elsewhere is going into the mutual fund and into cash. Those are the 3 asset classes we're building in the next several years. Real estate, mutual fund, savings. That's our new plan. You guys have a great day, a great week, and happy investing.